I'm Michael Avery, and you're listening to an interview I conducted for Classic Business on Classic FM 102.7. Gerbrand Smit, Fund Manager at NeFG Fund Management. Good to talk to you again.
Thanks, and thanks for having me, Michael.
Well, absolute pleasure. Now, back to business. Cricket is only tomorrow morning. We saw the CPI number come in today, and it was, as the market expected, fairly unchanged. What stood out for you in the CPI announcement with regards to food and that kind of thing?
Yeah, look, I think first of all, what stood out is that it's above our 6% mark that we are, the inflation monetary policy is monitoring. So that's, of course, not good news for the consumer out there. But yeah, I think month on month there was a few surprises, but I think the bigger picture tells us that we're in an upward trajectory on the interest rate cycle. We saw the upward movement 0.25 last week, and this probably tells us that this is in line with what they forecast, but it's probably higher than what they forecast 3 or 6 months back. So we're probably up for a few more interest rate hikes in the future.
Unfortunately, in the slow growth environment, core inflation ticked up to 5.6 from 5.5, so that is a bit of a concern as well. And, once again, it begs a question on the way inflation baskets are compiled, because many people would say to you, well, we actually, we look at a basket of goods when we go to the shop, and we feel inflation's probably in double digits.
Yeah, I think if you look at middle class, I think the inflation basket is probably more towards the lower income group. But if you look at middle class, it's certainly, if you look at what your medical aid's going up by, if you look at what food is going up by, it certainly should be in double digits for middle class and higher class.
Unfortunately, and when one looks at the taxes we pay and then add VAT to that and then add municipal rates and all the rest of it to that, it really would make one weep to see how many cents one actually takes home in every rand that we work so hard for. But that's, I guess, a story for another day.
Yeah.
We saw the euro, which was trading slightly higher against the dollar following worse than expected EU consumer confidence in July. This follows on from that record EU debt number announced yesterday. So some alarming warning signs coming out of the European Union right now.
Yeah, I think minus 8.4 for July on that numbers. This shows you maybe that the new measures and stimulus that was proposed by the European Central Bank have probably failed to convince the households that the economy is on the mend for that part. But if you look at markets across the globe, it's just been flying. And yes, there's a lot of liquidity in the system, but they're going to have to stop printing sometime.
Well, and that's, there was a hint of Machiavellian satisfaction for when that happens there, Gerbrand, because we all know that that's when a huge correction, and as you said, the markets are overdue for one of those, might happen. And perhaps some of those people who have been sitting on the sidelines can then pile in. Now, speaking of piling in, we saw a operational review out from BHP Billiton earlier this morning, and there really are no signs of iron ore production tapering off. It's actually at record levels. And this is in an environment where the iron ore price is under significant pressure. How do you think this will go down in the outlook for the market?
Yeah, look, they make about 40%, I think, from earnings from iron ore market. So we know that 2 years back everybody was piling into new exploration and putting up new projects, and at those prices it certainly made sense. But we know what happened in the meantime is the dollar price of iron ore has tumbled from, I think, $160 or $170 a ton to where it's now just on top of 100 or 110. And if you look at what analysts are expecting, there's still more supply coming online. We saw that today in Billiton's numbers as well, as you said. I think 15% rise year on year on iron ore. We saw that in Kumba's results as well yesterday. So a lot of new supply coming online. I'd like to see where the demand will come from to buy these specific products.
Well, that's a very good point you make, because when I was chatting to Kumba CEO Norman Mbazima yesterday, he was quite confident that he doesn't really see the iron ore price being under much further pressure. He said it won't go back to the $130, $140 levels. but he doesn't see it falling much below 90. So it'll be interesting to watch this play out. Would BHP Billiton be a stock in your portfolio in terms of where the commodity sector is in the cycle right now?
Yeah, look, we're probably trying to avoid some iron ore exposure over the last 2 years. So the better play in South Africa at the moment is Glencore. They've got no iron ore exposure. And I think from a Billiton point of view, all its operations fired, and they still have 30 or 40% EBITDA coming from iron ore. When you got a company like Anglo sitting here, no platinum filtering through to EBITDA from that specific, but revenue about 25% from platinum and diamond. So if you look at, I think Anglo got less exposure on a revenue basis than what Billiton would have. So we would probably prefer Anglo at this stage of the curve, and your number one pick would probably be Glencore.
Right, and we'll be hearing those numbers coming out from Anglo at the end of the week, so we'll keep our eyes peeled on that. What are you expecting from that Anglo announcement?
Yeah, I think most of the numbers are in already. So, I mean, the company trades at a 1.1 price to book. It's just below what it should long-term wise. We know they've gotten lots of stuff wrong over the last 3-4 years, but companies do mend again, and people do pull projects right, and they downsize on certain other projects. So we're bullish on that on a long-term outlook versus most of the other diversifieds that you can actually buy in South Africa.
Right. We also had a first quarter update for Brait saying that its net asset value is the way you measure this investment holding company increased by 4% to just over 33 Rand for the quarter, and also quite bullish about its UK retail division, Iceland Food, in a very tough market. Remains on track, so to speak. What's your view on Brait?
Yeah, look, it's always interesting to see that a company trades more than twice what its net asset value is. But if you look at the underlying, they've got a very conservative way of calculating their net asset value. So the market expects that it's actually worth much more if you take it into today's market and what other retailers are valued at. But it's a good company, it's a good quality. Chris de Visse is involved here. I mean, for people who don't know Pepkor, that's the Ackermans group, the Pep group. There's a few offshore ones as well. Not a bad business there.
When he's not carrying briefcases full of money into the UK, No,
and Premier Group are more towards the lower consumer. It's a lot of maize meal, Snowflake in there, and so forth. So great companies, but you're paying twice as net asset value as they calculated. So we're not holders at the moment, but it is one of the darlings on the JSE.
Well, as you mentioned right up front, though, they do apply a very conservative valuation to their investments. Certainly, the Premier and the Pepkor investment people would probably rate up to where the rest of the industry is.
Yeah.
Now, we saw this announcement by Trade and Industry Minister Rob Davies calling for firms to procure 75% locally, and it's shockingly naive. You know, I'm sure many businesses wouldn't quibble with the concept if they could sit down with government and strike a deal, sorry to use the pun, to end all the labour and industrial action, ensure security of power supply, and not have contracts where Eskom perhaps pays them not to even use power. But most importantly, we need to learn that we're competing in a global marketplace. It's not a question of choosing two similarly priced options and the foreign supplier is being chosen over the South African supplier. We're not even in the same ballpark.
Yeah, I think you're 100% correct. First of all, on a manufacturing point of view, we're not competitive, and certainly the guys in the labour market are not reliable at the moment, and if government does not act on that, certainly I don't see the green light going forward from business or private sector on this specific issue.
And it's unfortunate to see, because a lot of people were hoping that this presidential business working group would be able to tackle some of those systemic bottlenecks in the economy, and it doesn't seem like that's forthcoming, certainly from this announcement. So we'll wait and watch and see how it plays out. Now, I see that it's also time for Argentina to pay up, and this is over that long-running bout of legal action it's had with its creditors, which is driven largely by a hedge fund, and this is one hedge fund you don't want to mess with, because it's taken countries to the cleaners before and won.
Yeah, look, these guys actually bought a lot of the bonds a while back when it was very cheap, and Argentina is trying to hold back on their payments. So, yeah, certainly not a good thing. We know in 2001, Argentina defaulted on some of their debt. It's certainly not something that an emerging country or any country wants to establish. You need to invest the trust out there, because otherwise you would just fall into a inflation spiral and, of course, a stalling economy. And at this moment, world globally, that's certainly not something that Argentina can afford.
No. Well, I wouldn't want to be in Paul Singer's crosshairs. He's the head of NML, which is led by Elliott Management, and he certainly has a larger than life reputation for cashing in when you owe him money. Now, speaking of cashing in, we've got the auctioning off of the iconic Kyalami racetrack tomorrow, and on a quite personal level, it's with a tinge of sadness, certainly if it goes out of commission and is used for property development, like some people suspect, because my dad was actually part of the team at Alconi Developments that raced the Performance Renault from 1967, I think, until about the mid-70s. It's where he met Mr. Jody Sideways Schechter. He helped him beat Peter Goch in then Rhodesia, and that was all before Schechter, of course, went to Formula Ford. And thank goodness my dad didn't follow him, because I wouldn't be here. But I mean, it just brings to memory names like Scamp Porter, John Conchie, Eric Puddles Adler, Colin Burford, Arnold Schatz. Really back in the heyday of motor racing and motorsports in the country. So I really do hope whoever buys Kyalami has a bit of the old petrol head in him and does keep it intact, because it would be a huge loss to South Africa, don't you think?
Yeah, certainly. And I think the last one was in 1993, and I think Alan Prost won that specific Grand Prix.
The Professor, yes.
It would be certainly a big loss, and I think it's an iconic name in South Africa and for motorsport in South Africa. But we all know it's a 72-hectare property, I think, and the properties in that specific area go for about 4.5 million rand. So it is possible that we will see an end to Kyalami, but certainly I think a lot of fingers crossed for that not to happen.
Well, certainly mine at the front of the queue there. Thanks so much, Gerbrand Smit, Fund Manager at NeFG Fund Management, for wrapping up a rather interesting day in the markets here on Classic Business.